Bitcoin price is very much driven by a number of factors. On the one hand, you have global liquidity, M2 money supply, especially the asset side of that. And if you have a lot of government spending going on, a lot of liquidity coming to the market, I mean, the China Central Bank, globally, every country is starting to issue more debt. It's not just the US, and so global liquidity is growing rapidly. Bitcoin tends to lag M2 by about 90 days, typically. But you have these little foibles, like Trump could decide on a new tariff policy, and then you'll see the market drop. Or he may remove tariffs altogether, and the market will go up. So you have these, I call it policy changes that can affect the price of Bitcoin. You have also portfolio adjustments, right? Where you have people who have previously been in equities who now sell equities, go into bond portfolios, and as they re-level set their portfolios, what ends up happening is, Bitcoin is an allocation of their portfolio.
Even experienced analysts find it difficult to predict the recent wave of change in the Bitcoin market. Bitcoin has surged beyond significant resistance levels, igniting fresh discussions about its future trajectory, with institutional demand at an all-time high and retail investors eagerly monitoring the trend. Fred Thiel, the CEO of Marathon Digital Holdings, has become a prominent voice in this changing environment, providing a keen insight into the factors propelling this upsurge. Fred claims that we are not only seeing a normal bull market, but also a structural change driven by institutional FOMO, growing demand from around the world, and a supply-constrained situation that is continuously driving up prices. According to Fred, the present cycle is unlike anything we've seen in the past because Bitcoin mining is becoming more competitive and hash rates are increasing. A market dynamic that could leave many people out if they wait too long is being created by spot Bitcoin ETFs, sovereign interest, and rising public knowledge. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
For one thing, we're seeing all these Bitcoin treasury companies being created.
Yeah.
So where Michael Saylor before was kind of the person in town buying 900 Bitcoin a day, per his own admissions, you now have the Trump family, you have Cantor Fitzgerald together with Tether, and you have many others who all are raising multi-billions of dollars who are going to be in the market competing with Michael Saylor to buy Bitcoin, which is essentially going to drive number go up, I think, for a period of time. Stablecoin legislation passing through Congress and landing on the president's desk, I think is going to be another small leg up. Then you have market structure soon behind that. And then you have the strategic Bitcoin reserve coming as number 3. The SBR right now, based on what I understand from the White House, the SBR is now, they'll be receiving reports from all the government departments, so Treasury, et cetera, on how much Bitcoin the government actually holds. More than likely, it'll be a number in the 100,000 range because you have to think of forfeiture laws. And while the FBI or IRS may have confiscated Bitcoin, it may not be theirs to actually hold. There may be a victim that they have to deliver it to. And so you must probably have about 100,000 Bitcoin that they have. The question is then, what is the administration going to do to add to it? And what revenue neutral programs are they going to do that? And I think the US needs to move quickly because you now have other nation states wanting to do Bitcoin strategic reserves. And if they start buying Bitcoin ahead of the US, then it's kind of, well, the US, you guys were first, but you haven't done anything about it. And so I think when the US announces they're actually buying or adding to the Bitcoin reserve, that'll be another catalyst. So you have a multitude of steps. You're seeing some great inflows into ETFs right now, which is primarily retail, but you're also starting to see more and more institutional buying. There's a definite, I think you and I've talked about this before, there seems to be like a floor in the market where market comes down, there's always a buyer at some point.
What's the floor now?
Right now, I think there's very strong support at 98. We're building support at 106, and we hit 110, we bounced down to 108, we hit 110 a little bit more, we bounced down to 108. So I think 106 is pretty good support, and a backstop to that is 98. So you're seeing long-term holders, and this is a phenomenon that happens always. When you have 98% of Bitcoin in profit, then what you end up having is people start selling. The long-term holders at this stage in the market cycle typically sell a portion of their Bitcoin with a plan of buying it back when Bitcoin drops again. I don't think we're in a cycle like we've ever seen before. And so I would love for them to be proven wrong and then have to come into the market again while Bitcoin is rallying at 120, 130. So I think it's a different market today than what they're used to seeing. But when you have this much Bitcoin in profit, people feel okay, maybe I should sell a little, take some chips off the table, and buy on the dip when it comes back down. We'll see. Bitcoin price is very much driven by a number of factors. On the one hand, you have global liquidity, M2 money supply, especially the asset side of that. And if you have a lot of government spending going on, a lot of liquidity coming to the market, I mean, the China Central Bank, globally, every country is starting to issue more debt. It's not just the US, and so global liquidity is growing rapidly. Bitcoin tends to lag M2 by about 90 days, typically. But you have these little foibles, like Trump could decide on a new tariff policy, and then you'll see the market drop. Or he may remove tariffs altogether, and the market will go up. So you have these, I call it policy changes that can affect the price of Bitcoin. You have also portfolio adjustments, right? Where you have people who have previously been in equities who now sell equities, go into bond portfolios, and as they re-level set their portfolios, what ends up happening is, Bitcoin is an allocation of their portfolio, and if they decide they're going to rebalance to or from Bitcoin, or they're just liquidating a certain portion to go into cash because they want to go in and buy something else, then they'll liquidate across their portfolio potentially. And so those are the things that drive these dips. The big dips, the 20% dips, those are more macro. The Fed decides that we're not going to cut interest rates at all. You'll see a $10,000 drop in Bitcoin on something like that. So it's very much the news is driving the price right now, unfortunately. But I think over time, there's just so much more demand than supply. And, as the number keeps edging its way up, you think about last year, we went through this period where we were kind of moving sideways for a long period of time. And then there was a dip, and then boop, bounce up, and then now we were up at a new level, right? And think about it, July of last year, we were bouncing in the $50,000 range, and then all of a sudden it was 70, and then all of a sudden it was 90, right? And then we were at 100 just after Election Day. So I think we're going to see that type of volatility continue. But what's interesting is that you look at the volatility curve, and we're really starting to see a flattening on a logarithmic scale of the volatility curve of Bitcoin. And if you look at the power law and you look at some of these other methods people use for evaluating Bitcoin price, I think what you're going to see is that the volatility in Bitcoin is starting to diminish. Don't know what that does to its attractiveness in the market anymore, but the more stable Bitcoin becomes, the more like gold it starts behaving, and the more like gold it will become.
In what sense?
Gold is historically a very stable asset. It doesn't move up and down very much until recently, when you saw nation states buying gold because they don't want to hold treasuries, they don't want to hold dollar-denominated assets, and they're viewing gold as a better reserve asset. People are starting to view Bitcoin as a very good reserve asset if Bitcoin's volatility decreases, right? No nation state wants to have to go to report that, well, we have a $500 billion in Bitcoin, and there was a 15% drop in the price of Bitcoin, and so we just lost all this, right? A politician would lose their job if there was a 15% drop in their reserve assets. But if you're sitting on $500 billion of gold and it moves 0.2%, nobody's going to worry about it. And I think as Bitcoin's volatility decreases and it adopts more of a traditional commodity asset type curve.
An executive order has been issued by the U.S. to establish a national Bitcoin reserve. The government will now hold Bitcoin as part of a long-term strategic reserve rather than selling off previously seized cryptocurrency. Approximately 200,000 Bitcoin may be included in this reserve, and agencies must report all of their holdings while looking for ways to increase the reserve without burdening taxpayers. This move is a component of a larger strategy that also calls for the United States to take the lead in the global digital asset market and new stablecoin rules. Strong inflows into Bitcoin ETFs and demand from institutional buyers continue to strengthen the market as other nations contemplate creating their own Bitcoin reserves. Nonetheless, fluctuations in global liquidity, evolving legislation, and investor behavior continue to impact the price of Bitcoin, making it unpredictable. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
For most of 2024, all miners were in a full hodl. Now in 2025, you're seeing most miners actually selling their Bitcoin. I realize there's only 450 new Bitcoin issued a day, so that's not a lot. We're still doing a full hodl. And many of our peers, though, are selling. But then you have Michael Saylor buying 900 Bitcoin a day. So, miners don't really, the amount of Bitcoin miners sell from new production daily has very little impact It's a different story if a miner like ourselves, sitting on approaching 50,000 Bitcoin, if we decide to sell 20,000 Bitcoin, yeah, that would move the market, definitely. We have no intention of doing that, by the way.
Would you say then your stock should perform like a Bitcoin treasury company?
It does, actually, which is a bad thing because we're a Bitcoin mining company and we're not getting value for the Bitcoin mining business. Our stock, up until very recently, has been trading a little over 1 times NAV of our Bitcoin holdings, which means that our mining business is not getting any credit. We're now starting to see a shift in that. For example, today the stock moved fairly dramatically, and we have been outperforming MicroStrategy on a daily basis. And I think part of that is a little bit how Strategy is going about raising capital today. They're issuing preferred instruments that have dividend payments on them. You saw the Trump family convert that they issued today is fully secured. It's not an unsecured convert. And so that's secured by the family assets, the real estate assets. So I think the market is starting to price in more risk into these deals, and it's getting harder. And the challenge is that if you have large dividend payments, large demands on liquidity, you can only continue, if you would, by selling equity in the company or finding some other way of funding those dividends.
What do you think caused the price suppression of Mara stock, as well as some other miners year to date relative to Bitcoin?
I think that's very driven by the AI story, or the lack of an AI story around certain miner stocks. If you look at miners like Cypher, for example, they had very positive swing in the beginning where there was a lot of optimism about their ability to get an AI customer. They haven't been able to find an AI customer, and so then the stock started dipping down. CleanSpark and Mara have been viewed as kind of quasi-mining pure plays. CleanSpark, yes. Mara, less so, because we also have a technology business. We also are beginning to work with inference at the edge. Our model, unlike many of the other miners, is we don't want to be an AI hosting company. We don't want to build powered shells. We also don't want to provide GPU as a service in the AI space. We're very focused on providing inference at the edge as a fully managed service. And I think that's the area where the margins and the long-term revenue streams are much more attractive. It's a lot more like Bitcoin mining in some ways, but it also is, you're not dependent on a single or multiple hosting customers to really drive your revenues. And it's a lot less risk from our perspective.
Fred Thiel's observations demonstrate the level of maturity in the Bitcoin mining sector. The truth is more nuanced, despite the widespread belief that miners can easily manipulate the market. Today, miners only create a small portion of the daily trade volume, and that supply is frequently absorbed by other significant buyers, such as institutions and huge organizations. Fred clarified that large-scale actions by miners with substantial reserves, rather than the daily sale of fresh Bitcoin, are what drive price changes. Tens of thousands of Bitcoin are held by Marathon, for instance, but they are purposefully keeping them rather than selling. Fred also underlined that Marathon is a savvy investor in addition to being a miner. In addition to mining for Bitcoin, the company assesses market conditions and decides whether to buy or mine based on what yields the highest return. For this reason, instead of waiting to acquire Bitcoin through mining over years, they spent billions purchasing it when they thought it would grow rapidly. He also discussed the importance of energy efficiency for long-term prosperity. Marathon is able to mine Bitcoin virtually for free by moving outdated equipment to renewable energy locations like wind farms. This enables businesses to be more flexible and profitable, particularly when rivals are forced to regularly purchase new gear or deal with exorbitant electrical expenses. In the end, Fred showed that the future of Bitcoin mining isn't just about raw computing power, it's about smart capital decisions, energy innovation, and adapting to changing markets. As institutional interest continues to rise and Bitcoin becomes a more integrated part of the financial world, remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.